Good morning.
Good morning.
Welcome to Thursday.
It is Thursday.
How
Thank
is
God.
everybody?
I'm doing
How
good.
is everybody doing?
So,
Doing
Manuel,
good
you're going to
from
have good
So far,
weather.
Chicago.
so good.
Late.
You're going to have good weather in Chicago, hopefully today and tomorrow for sure.
Yeah, it's doing pretty good.
Yeah, that's great.
The foliage is looking real nice out here. All the
Yeah,
trees turning.
mine's kind of changing, but some of them, the leaves are just falling off. They need
Yeah,
change, they just fall off.
it's that wind.
Yeah, exactly. We got plenty of that here. It's been nice lately. So,
Yeah, it's
okay,
been nice over here.
good. Yeah. Yeah, fall is always a great time. Seems like in most parts of the country, it's awesome. So,
Yeah, it's my favorite time, September,
yeah.
October.
Yeah, because the humidity's gone, sun's warm, then comes winter, and then you're almost sad again.
Yeah,
At
it feels
least I
like
am.
air condition. Feels like air
Yeah.
conditioning outside all day.
I used to live in Chicago, and there was two seasons, they said, and I think it was true, construction and winter.
I call
So
it the windy city. When they gonna finish this and when they gonna
yeah, they're still working on toll roads. I said,
Oh yeah, for sure.
when does toll road start? 1948. I'm like, oh, okay, they almost finished.
They should have
Nope.
named it the Windy instead of the Eisenhower.
Yeah. Okay. S&P up 0.6 percent yesterday. Nasdaq up 1.1. All new records. Dow Jones down about 0.1%. Again, being driven up by the AI and the tech stocks. We got Delta Airlines, Pepsi on earnings today. Next week, I believe we start with the banks, and that'll be interesting to see, especially on their credit side, what's going on in the banks. Our friend Jerry Powell speaks today, so that's always interesting when he gets in front of a microphone. And our AI momentum continued yesterday with NVIDIA and AMD kind of driving the show. You see today we're just kind of flat on what we're seeing. Let's go down and see what the boys like. Oh, there's Delta. Oh, they top estimate by higher fares and resilient luxury demand. Now, when they say luxury demand, I mean that must be Bob flying back and forth between New Jersey and Florida, on his luxury plane. So S&P, Pepsi, tops
I don't
estimates.
fly Delta.
Oh, wow. Okay, well, they didn't mention that in there.
I
But,
don't have anything against them, but I do fly United.
Okay. I did too back when I was flying all the time. So, all right, let's take a look. What we did yesterday, not much. Investment wise, we got in this right at the end of this is the investment at the end
Chart's
of
not
August.
showing.
Oh, sorry. Thank you for doing that right away.
Sure. I was gonna let you go for a half an hour.
I know that's happened before. Okay, now you can see it, right? Okay. So here's our investment back in the end of August. Hits the 200 just on Berkshire. We're up about 2.7%, $1,300 on 100 shares. And the only thing that we're in now, because we got stopped out on three of the ones that we were in, is this Berkshire Hathaway, and it's down just 0.03%. I'll show you the charts. We got in at 500, closed at 499. And that's it. I'm pretty much done for the week. It's Thursday on those. If that stops out, then we'll be out. Doing pretty good down here on our under the 200s. We're still in Centene. It's still in Molina. That's from last week. Okay. And we're up 4.5 on Centene and up 11.6 on Molina. Really only got into one this week, from under the 200, and it's up. Yesterday we showed you, and it was down 1 point whatever, and I said, here's my 2%. I'd be out if it hit that. It didn't. Actually went back up, so we're up a little bit on that. And you'll have weeks like this. We'll see where it ends, but we'll still put our stops in. But interesting week for trading. You don't have to be in it all the time. Okay, you don't have to take everything on the list and get in it. You have to watch and see how the market acts, what the conditions are in the market. Here was a VRTX. It didn't hit, where I would have put a buy limit. It didn't hit, and it's up, 4.5%. So you just say, okay, I missed that one. I'm not going to chase it unless you're trying to be some kind of, in momentum mode. You can chase it, but I certainly doesn't fit my trading plan. It doesn't fit what I try to teach here. So anyway, let's go on. Let's look at some charts. And I'm going to be brief today, I think. Okay, SPY. Let me put the chart up. S&P still just kind of rolling up. We're just bumping on, record highs slowly but surely. You see boom, boom, boom right here. It's where we're going to open about the same. It's where we close. Got some sell orders above it. 677. You still have, the technologies, the 10 major companies within here really pushing this up because they're, the market cap's so high. So when they go up a little bit, you're going to see these go up a little bit. If they go down a little bit, you'll see the indices, the SPY and the Qs go down a little bit. If they go down a lot, you'll see these go down a lot. We'll look at the Dow, which is just 30 of the biggest stocks equally weighted. You see we're right up. We've been hitting resistance about 4 days, still above the 9, but sideways. We're going to open a little lower today, right about where actually right about where we closed. So again, just kind of sitting there, but gradually moving up. Qs, again, highly into the Mag 7s, highly into the tech and AI trade, right up, going to open up right on the upper Bollinger Band, which we've been kind of riding up. You see record highs, but we're not just screaming up on record highs. We're just bouncing up on record highs on the Qs. We go in and we look at gold, which is interesting because, again, like I said, you normally do not see your commodities and your equities go up at the same time like they're doing. So, there's a flag for me in my mind is saying, okay, when's the last time this happened? You can go back and check and see what happened after that. I'm not going to bring it up because I don't want to get into that discussion. But gold's going to open up, just a little bit lower than it closed, but we're on the outside of the Bollinger Band. Really nice swing trade on gold. I mean, just it's right here in front of us. We look at gold every single day, and the same with silver. This is the debasement trade they're calling it now. That we're seeing a lot of countries getting out of our treasuries and going into hard currency, they call it, which is silver and gold. Bitcoin is, following along in that, and some of the other cryptos, harder assets. And same with silver, nice run on silver. You pop up here, you're above the 9, you're at $35, and here we are a month, 2 later, we're at $44. Okay, not bad, and the oscillators all look good too. We look at Bitcoin. Bitcoin, here we went. We were right up to the next level of resistance, came back down, hit the 9, which is support, started off at the 9 today and heading back up. So, charts working on this one. We went up and rode up the upper side of resistance right inside the Bollinger Band, hit hard resistance 3 times, came back down, and now we're still, we still have this momentum rolling up. Stochastic's a little bit down, but flattish, and you're still above on the MACD, and you've got some positive up here. It takes a while for this to go through these resistance. We had a huge run here, so it's letting off a little steam. Some people are taking profits, I'm sure, and then we'll see if it keeps rolling. But, you go back history-wise, and Bitcoin usually follows gold and silver, 40 some days, 40, 50 days later, and that's kind of what we're seeing play through today. Ethereum. Ethereum has come down below the 9, but found support. You got double layer support. You got the 20 and you got the 50, and that's where we are. And your resistance now is at the 9, kind of sideways with the Bollingers. And then I don't like this stochastic heading down, and then you see the MACD heading down. We'll see if it can maintain at that support level or if it drops down through it on Ethereum. And again, the Ethereum ETF is FETH is one of them, the Fidelity, but it's right along this resistance level, and the chart, similar to Ethereum, of course. And then the IBIT, that's going to follow Bitcoin. Here's where we went down right here on resistance. And then again, yesterday we came up a little bit with Bitcoin coming up, but it got some resistance right at that level. It's one way to play Bitcoin. MicroStrategy, leveraged on Bitcoin, obviously. Here's where we went down, and when we were up to 125, came back down to, 122. We're going to open up just right here on support again. It looks like, lowering oscillators. You got the stochastic now in negative. Usually means you're going to see the MACD, but again, you get news. We start to see it move up a little bit, and this all changes with the volatility of Bitcoin. NVIDIA. NVIDIA, again, we're just kind of going up and we've hit some resistance back down to support. And then we're back up to resistance, but we're going to open right up at the upper Bollinger Band. Again, we talk about we don't care when we open, we care where we close. And here we are, on the MACD, still in the positive territory. On NVIDIA, Meta's kind of flattened out a little bit. Looks like we're going to open right about where we closed. We're right down here on support. We were talking about, potential swing on Meta. It's not quite there yet. I want to see the 9 come down, swing back up, get some price action above it. And also want to see the oscillators come and support that. They're not doing it right now. Google, same kind of thing, sideways, and this is why we see, the market just kind of going sideways and bumping up and hitting all too highs, because you see like Meta or like NVIDIA goes up. NVIDIA is the largest component in the, in the S&P and in the Qs. And so when that goes up and you have other of the large caps in there just going sideways or bumping, that's why we see it slow and bumping up into new highs like that. Microsoft, it'll come up. There we go. It doesn't want to come up. We're going to make it come up. Microsoft. Again, look at this. I mean, just long term, just not really doing much. I mean, it's come back up. This helps again, with all-time highs just bumping up a little bit when these guys move up a little bit, and then the video moves up a little more. It looks a little different when you bring it in, but here you are at resistance again. Tesla. Again, kind of sideways. Here's where Elon bought in, and then we've just kind of gone up and kind of sideways again. Got the 9 rolling right along resistance, which brings the price action down. We'll see if it swings back down. Look, the Bollingers are closing in. Got a MACD that's negative and moving down. It's following, the stochastic a couple of days ago started doing that. That's usually a good sign. You're going to see a negative MACD, and that's what played out here with Tesla. Amazon's kind of come down and done that little swing, you got here, and we're zipping back up. We found some resistance here at the 50. We're going to open up right a little under where we closed. And here's where you have some resistance at 228.71. But here's that Amazon. We got over and could potentially swing. Here's your crossover on the MACD. But you got to look at what your reward is compared to your risk and decide if it fits your trading plan or not. Apple, again, at the top, okay, just going sideways. Looks like the S&P, looks like the Qs. You got a few of them turning upside, like we just saw Amazon coming up. We saw NVIDIA bump up. That's where it's bumping us up right on that all-time highs and not really blowing us away, because all these guys are not just zooming to the top right now. Palantir, same kind of way, kind of sideways on Palantir, all the way back from, middle of September. We're rolling right, sideways again above the 9, below support or resistance, which we've hit several times. Flattish oscillators. What's going to be the catalyst on Palantir? Netflix. I think Netflix is resolved its issue with, maybe with Elon came out and wanted everyone to drop their Netflix in this area here. Looked like that affected it. Went right down to the Bollinger Band. Which we only trade outside of 5% of the time. Come back in, now we're above the 9. We're above the 50, but right on resistance again. So, a temporary little glitch, unknown market condition, Elon doing that. Have a crossover here on the MACD coming up. Not quite there yet, but it'll be there today if Netflix goes up. And then we'll look at some of our watch lists. Actually, the only one that we have is Berkshire. Okay, here's our investable line. Here's our 200. Okay, under that's the 200 keeps rolling up. Now we've got the 20 and the 50 above our cost basis, and we're right up here. This is, again, we've had a trade already. We came back in, we got in a trade up here, and then got out and made some money. And we'll see if that sell happens. I like that the Bollinger is still moving up a little bit. Again, on Berkshire. So again, the 2% rule is what I'll use on this one, since it's a trade. But we're still seeing the momentum from bottom left to upper right. So we'll see what happens today. But always put your stops in, and whatever your limit is. Mine's 2%. And the other ones that we had, FDX, we were in. Want to see what happened to FDX. We were in, we got out here as it came back down on a stop. You can see it drop down. So that saved us. We come out from being down here right on the 200. We're underneath the 9, but we got out with a little profit. So that was good. And then NDSN, I just like to go back and look and see what happens after we got out of them. NDSN actually came back, bounced off support yesterday. We got out the day before, came back, and now it's back up above our cost basis. But again, you don't know what's going to happen. Still within the chart. We said that yesterday. It's still within. It can still go up, has room to run. But with these markets, why take a chance? Take my profit out. I can always get back in if I want to. We're still in a nice run up on NDSN, but again, if you're ahead, why not take your money? Some of the others we looked at, LW. Okay, we looked at that a couple of days ago. Talked about it here. It's still rolling up pretty nicely on that. LMT. We talked about LMT last week. In this area, and said, look, it's running up the Bollinger. Well, you see, intermediate resistance came on 1, 2, 3 days in a row. It's just hard to get past that. That's where I get out. Some people ignore it and try to ride the momentum up. It's just what your trading plan says you want to do. FCX, Freeport, with you're seeing metals and things go up. You're seeing this. We were waiting to see. Right here's where we're looking at it. If it would come back down, and it stayed above on this day. So it gave you a good indication that you're doing okay on the 200, and then it just popped up yesterday. You got nice oscillators here. So watch out for sell orders above you, and then you have resistance on Freeport. So there are stocks out there, going up that are non AI related. Here's PCG. We talked about this the other day. Got above the 200. See if it'll make it. Did, and it's still rolling up above the upper Bollinger. I don't like to buy up there, getting close to resistance, but these are the kind of things we look for. Sometimes I just find them a little too late. NASDAQ, we talked about a couple days ago at this level. I said, okay, it's come down, starting to do that swing back up. Watch the oscillators. At that time, they weren't crossed over yet. Now you have crossover. So now you have an opportunity here, in NASDAQ, there's a probability, this is what we're trying to see, these swings back up. But again, you're still, you're above the 200, watch these Bollinger Bands, but sell orders here. So here's your reward, and you're going to have a resistance at the 50. So these are what we're looking for, these kind of swing patterns, and see if we can ride them, kind of like what we're doing in Centene and Molina Health. So there's NASDAQ. And then HE was Hawaiian Electric. We talked about it here. Hawaiian Electric came up, opened up right at resistance and dropped right back down. But, right now, the intermediate resistance level came on here. So I'm not interested in Hawaiian anymore. Tried to get up, didn't do it. And sometimes you'll see that on your charts. And that's why we have stops and limits on the downside. CNC, it's our under the 200. And we got in back here. I said I love these slow movers up and to the right. Watch a little bit here on this. If the MACD starts crossing over, but always have your stops in. Now your cost basis is here. Your 20 is above you. Your 9's above you. 2 good levels of support. You can put in at any point. I'd go back and look at, a stop, maybe at this area right under the 9, you're still making money. If it happens, the market happens to dump down at any point, you keep your profits. Molina Health. Again, another nice one. This one's kind of came back inside the Bollinger, but you got good profits. Looks just like the last one we looked at. You got the 20 coming up over your cost basis, and 9's there. Yeah, you can go back and take a look where you might want to put in a stop or a trailing stop, and save your profits. If that comes down and hits, you're out. Okay, you're out, but you made money, and then you move on to the next one. You don't get involved or emotionally involved in trades. Here's the one we put in. We talked about Roper, got above right here. It came up, got through the first level of right up to the Bollinger Band, and got up to the resistance level and stopped right there. So you have some sells above that, but we like these. They come down, the 9 comes up, and then we start swinging up. The oscillators look pretty good. Just watch your resistance. You might be able to get it at a better price, depending on what the market does. Right now, the market looks a little flat, at least at open. And then CHD was another one we looked at. Again, come down, we get inside the 9, we're right here on intermediate support, start popping up a little bit. In this case, we're looking, we're having a little trouble here at the 20. We'll see, sideways, but the oscillators still look good. And it's all about swing trading. You look at what the past history is telling you, and then you decide based on your trading plan where you get an entry in. You always try to get a better price. This maybe it was a good price. Maybe today we continue up. You do have sell orders right above you, so this is your first level of reward. Okay, you're going to get some sells there, and then you've got the 9 right after. Again, we're under the 200, so you got to be careful of that too. But these are what I'm trying to look for and ride this momentum up as far as we can go, utilizing this past data that gives us all these oscillators and moving averages. Others I'll look at, Irene. It's right up, resistance has come on. So, if you were trading it, I would take some off at that point. For me personally, not some financial advice.
So last night they announced they issued a $857 million convertible bond offering
Oh,
due in 2031 will mature in 31, which brings up the question of they're borrowing money
yeah.
to expand and grow. And I guess my question about that is, well, when does that become monetized?
Again, yeah, we talked about that yesterday.
Yeah.
Yeah, I
And
mean, those are the things you got to take into consideration. I don't know where it's going to open today. I didn't look.
it's
That
at
affects. We closed at
tell ya.
60.09.
Is right now 61.55, up
Oh.
a buck, about a buck and a half as of about 3 minutes ago.
The interesting thing about convertibles is you can convert whatever you lend them into stock at a future point in 31, I think you said. So maybe
Yeah.
people are thinking, well, I'm gonna do okay on this. So people are buying into it. I don't know. Thanks
Yeah.
for that. Thanks for that info. I didn't know that.
Yeah. I just read it this morning.
Core weave,
Thanks so
just
much for
kind of
the
rolling
info.
up, and sideways. And Nibius, we looked at this. We haven't looked at it in a while. Again, up, it's kind of hit resistance, and here you got this 9 rolling up to this resistance level. Is something going to pop it up, or is it going to roll back down? And look at the oscillators. The oscillators are kind of losing steam down here. And then I want to look at SPX, and I want to go. It'll let me go. This is the S&P 500. I was just looking at it yesterday, and I'm going to zoom in just a little here. You can see we really took off back in this area. This was 94, and I was looking at this is the monthly chart, and you see we came up to this area right here. This right here, this was the .com, dump, and this is a monthly chart. So you see these are months. So if you had gotten in at the high and stayed in and follow this line over, okay, and that was at August of 2000, it would have taken you until January of 2007, 7 years to come back to even if you were on the S&P. So then you come in here and you're like, okay, now I'm even, I'm going to do good. And then what happens? The great financial crisis. So if you were at the high in the great financial crisis in June of 2007, you didn't get back to even until January of 2013, 6 years, okay, on the S&P. Okay, so that's opportunity cost lost for me. Okay, and if you're 20 years old, okay, fine, I'm 20 years old. Okay, look what happened. But if you're 60 and ready to retire, this is not what you want to see. And that's what we talk about a lot, not only in using technicals, but where are you in your investment journey? And if you look here, I mean, we are sitting at the beginning of 2000, about the same time we were sitting at the beginning of 2007, and it dumped again. So you might, if you didn't get out here, you might actually have been all the way until 2012, okay, from 2012 years, okay, where if you hit this, you're 12 years now that you're equal. And these are just the facts. Okay, this is what it is. Long term, I mean, I started investing, oh, geez, and I've never had a financial advisor. My dad was an accountant. Okay, and I grew up when we had inflation in the late 70s and 80s, and he rolled bonds and he was making 18%. And he showed me how to do that. And he showed me about compounding your money and how you watch your money and just don't let it set and go. Okay, I started investing 45 years ago. I was thinking about this. So this is 41. I'll just say right here. Okay. In 84, I graduated college. So this is when I got my job and I started putting money in mutual funds. You didn't have uh, online and you didn't have the ability to trade ETFs. You just sent a check to the mutual fund company, and 10 days later, you got back a statement. They deposited your $1,000. And then every day you can look it up in a paper, you call their touchstone. And so if you have a lot of time, let's just say you put 15% of your paycheck, and these are months, every month, that's building wealth. Okay. And that's how I started. Okay. And if you look how it goes, that works out pretty good. Okay. From way back, from that. And you have your ups and downs. But what I worry about now is I don't have this runway anymore. My runway is less. Okay. So here was, the great financial crisis. Now we're 12 years in. So now we're back to equal. Okay. What if I was 55 or 60 here, or 65? And now, 12 years later, I'm 78 and I'm back to equal. That's not what we want to do. So that's why we use technicals. That's why we go back and we look at what were the fundamentals what was going on here that caused this? What was going on here? Are there anything that's similar? I do that a lot. Here, okay, here is this was COVID. Okay, so we knew what that was. The government dropped everything to zero and pumped the money in. So money came all the way up. And what happened there? Okay, so you go back and you analyze. Well, they put so much money and it caused 10% inflation, and so with that inflation, the government or the Fed started raising rates. And what did that do? It dumped you. Okay, so if you were in at this point, okay, to get back to even, okay, this point was November of 2021. You didn't get back to even until December of 2023, 2 years later. Okay. So again, depending on where you are in your investment world, I mean, you have opportunities here. And now here we are today. Okay. So, this will happen again. This will happen again. This will happen again. This will happen again. But this is I was just like looking at, look how much, since the great financial crisis, when they dropped interest rates to zero, look how much of a slope there is here compared to here. And now, our rates aren't zero. They're not going to go back to zero. And here's where we are. So use history, use charts, look at this chart. This is a monthly chart. I mean, even if you just use the 9 to get in and out of your SPX, or you use the 50. This thing bounces off the 50 a lot. It got under here, great financial crisis. And since that point, it bounced. But since this point right here, if you use the 50 on an investment, you're in at 2011, you're still in on the 50. You bounced off of it, but you're still in. Longer term trends. So again, when we talk, like we talked about yesterday, we talk about, is it a bubble? It isn't a bubble. It's really up to you. But go back and look at things like this. What caused this, and what's my runway left? Okay, my runway is short. I don't want to lose any money. Okay, I just want to make money. That's why I'm very conservative in my trades. That's why I have different accounts. That's why I have an investment account. That's why I have a trading account. That's why I have an account that just brings in income. It's an income account. And then I have treasuries or CDs. I'm spread out. And I also have crypto. Okay. And I watch them all, but I don't have the ability, to take a hit for 12 years right now. I just do not want to do that. And that's what Trent and I, the Kerry, are looking at with, I do some short-term trading to show you how you can get in, get out, and use those technicals, for long-term, like we just looked at on the SPX. Trent brings in, the intermediate to longer term, and, with his intermediate trading trend line is awesome. You know, on an intermediate, you look at what he's done and look at his TEL 12 and what that does, and you look at app 11 and what happened. I would have been out of app 11 on a short term. Trent would have still been in probably because it didn't go down into his trading trend line. Okay, intermediate. Kerry would go look at his fundamentals and say, okay, I believe by 2029 it's going to be here based on that. 3 different views, and you can use them all interchangeably. I have a long-term trading account, a long-term account, investment account. I have a trading account. I have an income account, and I use them all. I just don't use one tool. I use them all. We try to split it up and show you how to do it differently. We're not going to tell you what to do because we can't, but what we can do is say, this is what we do, and this is what our experience has been, and experiences of all you guys who contribute to this call. Okay, some remember 1987. That was my first big crash. Some remember the great financial crisis. I know Bob personally, just talking to Bob. Bob went through the great financial crisis, and it wiped him out, and he had to rebuild everything. And what a job rebuilding everything that he had. I mean, that takes a lot, and a lot of people did that. Some people got crushed, never did recover. Okay. We don't want anyone to get crushed, okay? And we want to teach you a skill set that you can use within your own trading and risk management. And that's why we're here as a community to talk about these things using my experience and Trent's experience, Kerry's experience, and all of your experience too, and what you see. So I'm going to end it there with my little, I feel like a preacher, kind of like it's Sunday. But it's going to be a nice day today. Sometimes you got to step away. I'm going to go out and have lunch outside and at the lake. And I'm going to head downtown and have a margarita on the corner. I'm going to watch commerce go by. That's my day. I'm going to get away from all this today. There you go, Trent.
So Mark, I want to hit upon something, the S&P 500 chart that you just put up. This is, I got to thinking about our conversation yesterday and about, is AI a bubble? And I remember in 2025 or 2005 was housing a bubble. I remember 99 was the dot-com thing, a bubble. And I got to thinking about it over the week or over the evening, and I thought, where in all of those situations, what is the commonality between what that bubble element? And what a lot of it comes down to is leverage, is borrowed money and credit. And private equity has, since 2015, has grown by 3 times. It's about $14 trillion in assets right now. That's gigantic. Since 2015, it has basically tripled in the amount of money that's in private equity. And private equity has a really easy way of just going and borrowing money. They can go borrow money, they can raise money for funds, this, that, and the other. And then they lock it up, they go buy companies or they invest in companies. And then if it doesn't work out, they just file bankruptcy for that fund, and the investors and the creditors lose their money and they go on their merry way. Well, when I look at this chart and the growth of private equity, even just going back to 2020, this, to me, this is the bubble. This is the beginning bubble. This is the foundation of your home. This is the cement basement that you have supporting your home. And it is becoming very challenged. You look at where interest rates have gone to service debt since Powell started raising rates. I believe that was March of 2023. The cost of money has gone up. And when you borrow money as a company, you're on a shorter term period than you are as a retail borrower. And so that cost to service that has gone up. And we are seeing it in the last 12 months. This is actually going back to 2010. This is from S&P Standard & Poor's research firm. The first one is the U.S. private equity venture capital portfolio companies and total bankruptcy filings. And as you can see here, back in 2010, there were basically 828 PE and VC funds that filed bankruptcy. If you go to where we are as of 2024, We're at 694 companies that filed bankruptcy that were private equity and venture capital firms. So we're seeing that growth increase from 2021, 2022 through 2023, 2024. Presently, we're seeing so far, we've seen quite a few bankruptcies here recently that are PC related. Back in, I think it was April, I mentioned about the private equity firm that owned Joann Fabrics, filed bankruptcy with Joann Fabrics. The company the private equity fund that owned Billabong, Volcom, and Quicksilver retail stores filed bankruptcy as well. I believe there are over 110 private equity funds that have filed bankruptcy or have had a relationship of companies within their funds have filed bankruptcy so far this year. So where I see the risk is in credit. The challenge, what we have seen with private equity is when they build a fund and they'll have a good return on the fund, they'll redistribute that money out. And over the years, that money has been redistributed from buying a corporation, so like a company or a commercial asset. It's now going to private credit. And so that is commercial lending. So companies lending money on a company level or to consumer credit. And what are we seeing in consumer credit today? We're seeing the highest default rates in consumer credit. We're seeing cracks in commercial credit. And so this passing of, or this massive growth in private equity, this hockey stick that we've seen is now similar to what we've seen in the S&P 500 since 2000 really. It's vertically gone up. And I think when we talk about bubbles, the first one we talk about is AI. 50% plus of the S&P 500's price movement is based on AI and tech-related companies. That's massive. And if you look at the expansion of spending in those categories and related that to private equity, it is a mirrored image. And I think that's the thing about is, we don't know when the crack will become an earthquake. We don't know. We didn't know it in 87. I mean, you think about it, if you go back and you look at the headlines on the 19th of October in the newspapers, it was about Nancy Reagan having breast cancer. It was not about the stock market. And I think we have to look at these different variables as well. Market, I've said it many a times here recently. I believe the S&P 500 will go to 7,000 by year's end. And it looks like it's setting up to do that. Presently, today, our resistance level is about 6,800. The options market is pricing that in around 6,800. Where things get dicey and volatility expands is if the S&P 500 breaks below 6,695. That's that blue line right there. But right now, what we're seeing is this nice little trend upward. Volatility is low. Chances are we're going to continue to see that expansion. But if you go below the multiple layers of economics, the economics of the world and the market, we're seeing cracks. And those cracks are becoming crevices. And those crevices eventually become major gaps. And eventually the surface eventually breaks. And in my opinion, the equity market is literally the surface of the earth. Everything below it is what needs to be paid attention to. And what we're seeing is cracks, we're seeing crevices, and eventually that will rise to the top. Doesn't mean there's not an opportunity to invest in things. It means that you pay attention and you risk manage, because at the end of the day, on October 19th, 1987, the stock market lost 22% in a day. And it took a while to get back. And as Mark pointed out in that S&P chart, sometimes it can take 12 years. And I know a lot of the guys here and gals on this call don't have 12 years to recover. And I think that's one of those things you got to take into account. Right now, watch your, have your process in place, have your risk management process in place, and follow it, stick to it. Don't get caught up in FOMO. So,
I think
um,
just to follow up a little bit, Trent, in support of that, and the way I look at it, we can look at charts, and Lord knows I love charts. That's what I do. It's what I love. But you also have to look at what the things you just looked at, along with other things that are happening. So I have to dust off my economics degree from way back in the 1880s, and I look at market concentration of 10 companies really moving this market, since 2022 or before,
Yeah.
especially since Chat GTP came out. I look at interest rates, at a higher sustained level than they had been for a lot of years, and how does that affect the market? When's the last time we had high concentration of companies? You looked at the Great Depression was one of them. I mean, just you see these things happen because if you have 10 companies out of thousands, and those are the ones that are 50% of the market, and they dump, everything's dumping. So I mean, that's just common sense. And right now we have that. Okay, they're not dumping, but that's a risk. I went through it yesterday. AI stocks, 75% of the S&P return since 2022, 80% of the earnings, the AI stocks, and 90% of the capital spending. What if they stop? Back of that mind, it's in my head. It's a warning sign to me. Okay,
Mark, here's something to take into
68%.
account.
What's that?
Here's something to take into account. You look at the internet boom. How long did it take for the internet boom to become profitable? About 20 to 30 years. I remember the internet boom started in the early 90s. For it to become profitable took, what, 20 years? For companies to actually start making money, Amazon didn't make money until they started offering web services. You look at a lot of those companies, and then you look at the flush out. I look at AI in particular, and it's a similar thing. How are you going to monetize all this $2-3 trillion of spending? And how are you going to, power it? That's a secondary thing, but how are you going to monetize that? And then you look at the expansion of all this money piling into it. And as we pointed out with Oracle yesterday, the loop, here, NVIDIA gives you money, and then they come back and they rent NVIDIA's product, APLD. Somebody asked about that because their earnings call comes out today. I believe APLD had an investment from NVIDIA, if I remember correctly.
We'll look at these charts when we're done. Yeah, definitely.
Yeah. But so is that one of those loops? Is that here, I'll give you 100 million, you give me back that 100 million? I mean, that's not growth. That's just swapping pockets.
You take that
Circular
and you go,
money. I sent
you
you
go,
that video, right? Circular.
you go,
Yeah,
Here you go.
yeah.
Oh, here you go.
Go back to the telecom era, and that's what the telecoms did to their vendors too.
Enron.
Yeah. I mean, I look at other
Yeah.
things too. I mean, I look at 65% of Americans live paycheck to paycheck, 68%. We have record high credit delinquencies in student loans and autos, starting to see the housing market slow, record high debt in households and government, record high bankruptcies, individuals and businesses since the great financial crisis. Our monetary inflation is greater than 10%, which is deteriorating the dollar. I just put up on the chat, spot silver is now at $50.09. One of the main reasons is unsustainable global deficit and debt levels. Okay, so you got to take these into account and then go back and say, go back separately and look at each one and say, did this happen before the last time we saw, market go down? Well, I went back and looked, and a lot of this stuff has happened, before markets have gone down. And so it's not saying that we can predict that. I never said we're in a bubble. I said that there's a lot of similarities to bubbles, and bubbles tend to be at record highs. Okay. And then I went back and I'm like, I was saying this before. I just went back and I put it in the chat in the morning. Others are saying the Bank of England, International Monetary Fund, Goldman Sachs, David Solomon, David Einhorn, You can go read these. Kareem Musalim, Ray Dalio, Paul Tudor Jones. Okay, you can go see what they're saying, and so it's not just us. Okay, uh, these guys have been around, and they're supposed to look out and look at all this stuff back forever and advise their clients on it. So, uh, again,
Okay.
you have your own mind. You can do whatever you want, but I like to go back, look at the charts, go back, look at what happened when these charts did this, did this and down. What was going on in the economy? What was going on with interest rates? What was going on with unemployment? All that stuff, and see if there's similarities, and then come back and look at the picture today and see what it looks like. That's me.
Mark, on the flip side, if you look at cipher mining, CIFR, this thing is exploding in the last 48 hours.
Mm-hmm.
And it's like, why? And it's my belief, it's money looking for value.
Which one is
You
this?
know, CIFR, cipher mining.
It's
Like
Bitcoin.
yesterday,
Yeah.
we started talking about, I think 2-3 weeks ago, it was in the sevens. That's a hockey stick move. Is it going to go to 20? Option market thinks it's going to 20. And that's a powerful entity in itself. But at some point, that will change. As you can see there, it's outside the Bollinger Band. You're coming in potentially resistance today.
Sell orders. Yeah.
You got a ton of liquidity in that stock, though. I'm in that very, very good in the last 2 weeks.
Yeah.
So
But here's the
there's
thing. I look at it and I go, as fast as it goes up, why is it going up? Because Iran raised $857 million in a convertible debt offering. So everything is Hive doing the same thing. HIVE is doing the same thing.
Yep.
So
And the
you're seeing
Bitcoin and the
these,
Bitcoin plays too.
yeah, they're all Bitcoin related. So it's
And
this
that's what I said.
concentration to an asset class. And always remember this, no matter what the asset class is, when you get this hockey stick move, eventually it goes to zero. You're going to see private equity. You've seen it in housing. You've seen it throughout history. So what I'm saying is, if you can ride this train for as long as it goes up, awesome. Do it. That's great. Not recommendation or advice, but the chances are these companies will continue to go a little higher. But have a plan. Have an exit strategy. Preserve your profits.
And I think
that's the
I
name of
think
the game.
I see the integration of AI and blockchain, which is Bitcoin. I really do see that in the future. And that's why I see, with some of these miners that are going into power generation and, and you can see when Bitcoin goes up and you got AI going up, these are really good companies to be in. Yeah, but it's volatile and they're really good companies to be out of at the right time too. But yeah, and I mean, money flows to where the value is. And I've always said, look, there's an opportunity somewhere. You just got to look for it. Paul sent one over, which I like, CNR. It's a natural resources company. Got above the 200. You could have swung under the 200, got above it. Nice run right along the Bollinger. I don't like it to buy inside the Bollinger, but look at this thing is giving you plenty of opportunities down close. I always say try to get it closer to support. It's giving you plenty of opportunities every day to get under that Bollinger Band. And here's, you just go back and you buy in. Still got sell orders up here above at 103.79, and then resistance, way up the top. But this is a nice one. Has good volume. Also has good oscillators. And look at that volume's going up. So again, I don't like to buy outside of the Bollinger Band. I like these that just kind of tap it. Now I got somebody. Paul must have told everybody about it because then they came in when they bought it yesterday because somebody said something here. So I bet it was Paul. And they got more momentum rolling in there. So I like it. Someone wanted to look at Uber. Let's look at Uber. Uber's kind of sideways, okay, right along resistance. Let's back it out a little bit, see what we're looking at from Uber's point of view. Yeah, you had a nice run up right here at the 200. Here would have been your Paul Tudor Jones moment, and you're still in it. From a swing trade point of view, you're kind of up at resistance area. And I'd kind of wait and see. At this point, you don't want to be buying at the high. You're still bouncing between support and resistance, and you've hit it a lot of times. Yeah, we'll see what happens, but you got to get rid of this. And then you got some sell orders above it at 102.02, but you are above the 200. You're starting to get a little turn on the oscillators down here. I would hold off on a swing trade on that one myself. Applied. Okay, this is the one talked about. Look at this. This one's done a nice run up. Okay, and you said it's earnings today?
Believe so, yeah.
Okay.
Somebody mentioned that they have a earnings call today.
Oh, that'll be interesting.
Um,
For me on swing trade,
yeah,
I get
today.
out before earnings. So I would have been out yesterday if I was in it, which I'm not. That would have been a nice one though. Look at that. Whew. Get above the 9, you're above the 200. Look right here, you got the crossover. Okay, validated it. Ride that thing all the way to this line is where I would have gotten out 3 days ago. And now you got earnings. So it's a crapshoot on earnings. It's 50-50. It can either go here or it can go here, up here, and it just seems like when earnings come out, these companies either go up 15% or down 15%. And that's it. And that's the dice you're throwing. And it's 50-50 for me. So on a trade, I always try to get out of those basically.
Hey,
All right,
hey, Mark, when you get a second, look at CCOI. This
CCOI.
is yeah, it's trading below the 200, but just moved above my intermediate trend line. And
Oh,
the
nice.
trade trend line is moving through as well. So could be an opportunity for a swing. Probably
Yeah,
not.
it's it. No, I think look at this. It took forever to get past this 50. It was just such a roadblock. It finally busted
Mhm.
through above the 9. And where did it bust through? When the 9 crossed the 50. And now you're riding the upper Bollinger Band. I like the fact that it's, the oscillators are looking pretty good. It's still got some good volume, 1.2 million. So again, I would go back, try to get a better price at some point to see if it'll dip down and get your better price. Got the Bollingers still rolling up to the right. I like that. What's our price on this? 40 some bucks, 42. So it's not too out of range. And you got sell orders up here at 47.05. But right now we're between support at the 9 and resistance up here at the upper Bollinger Band. I think someone said
Oh, go ahead.
someone said I think CRML critical metals. Look at that. When earnings came out, somebody got rug. Oh, yeah, negative 35 cents. So this thing opened and closed right at about the same. It's right here, okay, on this earnings, and it went all the way up to resistance, and then rug pulled all the way down to support at the and then it ended up here, and now we're seeing it. It's still going on the outside of the Bollinger Band. I don't know what the news is on this. Must have been some news. Maybe the government bought in or something because the earnings were negative. But yeah, look at the run on the MACD,
Yeah.
but that's because of this. Okay, what else you have, Trent?
Beam, BEAM.
I think this is
This is
biotech,
Beam
isn't it, or something like
Therapeutics.
that?
Yeah.
Yeah. Oh, look at
Yeah.
that.
Against resistance. Yeah.
Yeah, right up on it. This is for swing trading. Okay.
Yeah.
If you were a 200, Paul Tudor Jones, like came over here, had trouble, dumped, had trouble 3 days up. If you were like an investor, here's your line right here. Okay. You got in at somewhere 22.91. Now you're up at a resistance at 27. So you're up $5 on your investment. You can either wait, see if it comes back down and bumps it. I like to see these 200s on an investment heading up this way so that when you get in, okay, on your cost basis is flat and your 200 keeps going this way. So that way, when you decide to get out, if you're using the 200 is up here and your cost basis is down there. The way this is going, let's say we got in here, okay, you're still under, your cost basis is above the 200 at this point, but I want it to come back up and get above my cost basis. So I don't see that happening yet. You got a good 30 days maybe on that. So
I think what I'm watching is my intermediate trend line is creeping toward, that would be your 50. It's creeping towards the 200.
put yours up.
So,
Put yours up. Let's see it. You have it up?
okay. Oh, let's see, we gotta expand it. Here we go. Can you see that?
Not yet. There it is.
Okay. So that white line's my trade trend line. It's 15 period moving average. And then this is my sort of line in the sand, is that intermediate trend line. And what I like about this is the
Yep. Are you there or did you freeze? Looks like he's frozen. He's frozen in time in Texas. Let's see if he gets back.
He's
That
usually
humidity
good.
got into
crosses
his
through,
Yeah.
comes down and
Hold on.
touches it.
You froze for about 20 seconds. So
Oh,
rewind
shoot.
20 seconds. Yeah.
Okay. Oh, shit.
Shoot.
It's Elon. I think he's fixing something with
is that humidity.
Yeah. He's in a tent today. He's still frozen. Oh, well. See if he comes back. He's not. I'm going to have to invoke my guest status of Bob Cominos here soon.
You there?
Oh, there he is. He's
Bobby's up.
back. All right. I almost had to invoke the guest status of Bob to replace you there for a
You almost
second.
got bumped.
Oh, he's gone again. I still might have to bring Bob in.
Bobby's gonna have to bump us. Bobby, you're up on board.
You're up in the deck, Bob.
I got
There
nothing
he
for
is.
you today. I didn't
Oh,
prepare.
you do
I
too.
wasn't told to prepare.
You always need
Oh,
to
look,
be
he's
ready.
back. He's back.
You're like the guy on
You
deck
got
ready
lucky.
to
You
go,
got lucky,
go save
Bobby.
Maverick.
Your savior
Hey,
is back.
Yeah,
hey, Mark,
he's alert
You-
one.
you put that note in about silver. I've been in silver for about a month now. Silver and copper are rocking. And I
Yeah.
noticed a little pickup in aluminum too. So those commodities, materials are really doing well. So
Which is a
Well,
flag to
note.
me because when those do well, you shouldn't see the equities do as well, but you're seeing both. So
Where-
again,
And not for anything, but where is silver now? I haven't watched it, but I
Over-
have physical silver.
it's over 50 on spot price.
Wow, I've doubled my money.
50.9. Yeah, I have a bunch of silver too.
Yeah.
Regular
Wow.
silver.
It's been that gold,
Anyway,
silver,
good job,
platinum
Paul. I'm
have been
glad
on
you
a
were in it.
run for a while.
Yeah.
Does
So
she
let's do
copper?
one
It's
more.
been
And I think a lot of the silver and gold, I mean, it's commodities, and usually you race to commodities when you're afraid about the economy, or in this case, I think it's really debt and debasement of our dollar, and I truly
Yeah.
believe that.
Have you been watching
Hey.
copper?
Yeah, copper too. Yep.
I think a lot of the metals have done very well. But like you said, Mark, it's where is money going? And in a fear situation, you go to a hard asset.
Yep.
So, yeah.
But copper's still not where it was, just back in July. Look at this dumpster
Yeah.
here.
I'm in
Oh, yeah,
SCCO, Southern Copper.
Copper's related to housing, and
Yeah.
that's
Oops.
Sam, Cat,
Oh,
Oscar.
SCO.
Sorry.
Okay.
Yeah.
I was gonna say, what? Oh, come on.
Sam,
not-
Cat, two C's, Sam,
Okay, I'll get this one of these days.
no, CCO. We're making it harder for you, sorry. Sam, Cat, Oscar.
All right, now let's see if it'll bring it up for me.
Two cats. Sam,
Okay.
Cat,
CCC.
sorry.
Oh, all
And
right. Before it now won't come up again. All right. This is really good. There we go. Yeah, you might be at the top
Boom.
there, buddy. We'll see. I don't like that line. We'll see though.
Yeah.
It's gone up and it's hit where the sell orders are.
Yeah.
But nice run. But
All right,
yeah.
Mark.
market just
Okay.
opened up 3%. Anyway.
Zeke had a question about Tesla, if he's still on. If not, if you could pull it up. His question was, Tesla today is in pre-market, three very long candles. What does that indicate?
Okay.
I don't know if that's pre-market he was talking about or what.
We're open now, right?
Yeah.
So this is this is where it is. So it opened right below where I thought it was going to open. It's below the nines, below resistance, hit resistance.
I'm
The
talking
MACD
one
is
1 minute candles.
1
Oh,
minute.
1 minute.
Yeah, look at a 1 minute candle.
One minute. Man, I haven't looked at 1 minute since I day traded. Okay. All right. What are we looking for?
Other
Other than it's
going
going,
back
other
half
than
an
it's
hour.
going down.
Probably
Let's go back
around
today. Let's go
like
2 days. I'll
Tuesday.
go 2 days here. Woo. Here's where we opened. So even on the 1 minute, it was dying at the end of the day yesterday. So what's our question?
What causes those horribly long candles? But
Just a variation from the bid and the ask at the beginning of the minute to the end of the minute. You know, this candle just tells you where, in this case, we opened down here and we
yeah,
closed up here. And that's so in that minute, that was the range of trading within Tesla. So Tesla's a highly traded stock. Okay, so you got a lot
yeah.
of volume. So that's what you're gonna see on the 1 minute chart. But I mean, you go back to the, let's go to the 60-minute chart. Okay, so you still have some long ones. There's just a lot of volume on it, but you're not seeing the same amount of big tall ones usually on the 60-minute chart because you take 60 of those minutes and put them together. And then let's go look at the oops, where are we? Let's look at the daily chart. There's daily. Okay. So it's just, here's where we opened, here's where we closed. It wicked down here below where we opened. In this case, we opened up here, wicked up a little bit, and we closed here. So anything that's in the solid is where we traded between open and close, and anything on a wick is where it traded outside of the open and the close, is what that means.
So intraday.
Yeah. Yep.
Yeah.
Does
Hey
that
Mark,
make sense?
let me show something real quick.
So,
I shared that I added this new plugin. It tracks the option support and resistance. What's interesting is you have support on put support right at $430 on Tesla. And you look where it's come down to so far today. It got opened at 431.81, got as low as 429.28, and immediately bounced off it. You got a resistance level at 450. And so when you look at this from a perspective of what's the option market pricing, market makers are hedging their positions. What it's telling you is that this is where they didn't support. And so you've come down there. This blue line is that gamma flip line. And right now we're below.
yep. He's losing his Starlink. Where's Bob? Bob's on deck. Call alert one. Here's alert one.
He's got to go to Texas with better, internet. Maybe he wants to make a deal with, with Elon on
He's
some
got Starlink.
satellite internet.
He's got Starlink. That's the problem.
Oh, he has
That
Starlink.
is.
Yeah.
Yeah, it is. And
Wow.
you know what it is on the app? It shows cloud cover. That's my obstacle right now.
So what about a hotspot?
Same thing. my phone, I could run it off my phone, but
You still
I
have,
have better success with this.
yeah, spotty on
With
your phone
Starlink.
too.
Yeah, it's spotty. It's just I'm out in the middle of nowhere.
Hey,
So
look where I'm at.
So replay the last part of that explanation, Trent, please.
sure. So basically the option market is pricing in support and resistance levels. When market makers get your order to buy Tesla or sell Tesla, they
Oh,
options and sell buying put options.
oh, he's
We've been
back.
playing Jeopardy. We've been
We
playing
got you
Jeopardy.
right. You were right like this. You were frozen.
Hey, Trent, go find a Starbucks.
Yeah. Well, that's about 2 hours away. I'm not driving to Austin today.
I'll go
Anyways,
find a coffee shop where they have, some
hell,
internet.
yeah, right. Today's a
Where are
cloudy
you
day.
in,
Anyway,
where are you in Texas,
anyways,
Trent?
I'm in Round Top between Houston and Austin.
Okay.
Yeah. Basically anticipate more about higher volatility in Tesla today because it's trading below the gamma flip line. So you anticipate volatility in Tesla to accelerate. Whereas if it's above, the stock price is above the gamma flip line, that was that blue line there. Maybe I'll create a video and explain that today and put it on the Discord and shoot it out to y'all. You'll have less volatility and more of a steady move up. But those are just little mechanics you can take a look at. All right, Mark, I gotta get to work. My shift starts here in a couple minutes.
Oh, well, I hope you don't have to use
I
internet.
thought you
to do
were
it.
at work.
It looks like it.
I am always at work, Bob. Bob, I
Yes.
play many roles in this world.
He has to open the tent flap here in 10 minutes.
Thank you,
Yeah.
Trent.
Yeah.
You're welcome. I enjoy the morning meetings.
There's a
for sure.
YouTube video for that, you know.
Open the tent flaps.
Probably. I got it down to a science. So
Then you can make a YouTube video on that.
yeah, great. That's what the world needs. Me making a
give
YouTube
us-
video on opening
give-
flaps.
Give us an update. How's business?
So we opened Saturday. It's a 2-week show, ends on the 18th. It's very what we have noticed is the show is very in the last year we've seen the number of basic buys, not big art like that, has declined. So the price points have gone from say $700 purchases down to below 300. She's making the majority of her money from very like her ornaments, small, say less than $400 purchases. She did have one of her collectors came in the other night, 20 minutes before we closed, and bought 6 paintings and didn't even ask for prices. So, and this person is a ultra wealthy person, one of the 0.01 percenters of the world. So they're not, that person is here for I think a week, and she and her assistant just goes around and says, okay, I'll buy that. I'll be back on Friday to pick it up. And so it's that level of wealth is still buying big stuff. The average consumer is tight. So yesterday was a disappointing day. But overall averages were above water. We're profitable right now. So we've got in one of the big show places down the road opens up on Friday. And so that'll bring in probably 50 to 100,000 people over a 5-day period. So we should see that. But she's got more interest in big art, and that's good. We're moving a lot of that in comparison to the last 2 shows. But the majority of it's what I call at the counter items. So $45, $50, $100, $200, $300 kind of stuff. So it, I guess at the end of the day, I look at a year from now, we'll see a possible expansion in home purchasing, and because rates will eventually come down to a reasonable rate and people want to decorate.
Yeah,
And people
I mean, they also don't want to overspend, on interest if they got to finance it, right?
sure.
Um,
Yeah, exactly.
a quick update. I was talking to my bookkeeper, and dentists and oral surgeons are a good bellwether for how the consumer is, because they do those things, based on money to spend on it, right? Because dental insurance is very slim, right? So you pay it out of
Right.
pocket. Um, they're seeing a decline in the amount of work that people are willing to pay for at this time too. He was telling me he services like a half dozen of them in my area. And also I was talking last night to um, my dock worker, who's a friend of mine, and we were just talking about ships coming in. Is it busy? Is it lightened up? The answer is yes, substantially. And lastly, his
Substantially
sister
busier or lightened up?
lightened up.
Okay.
And we're before they normally get ships in now for the holidays. So they're not as busy, and he's not working weekends as much due to uh, the less traffic of boats.
Mm.
Also, I got to find out that his sister, who is a big shot in advertisement and who is out on maternity leave, just got laid off too.
Oh, wow.
Yeah,
Surprise.
Yeah.
yeah. So absorb that a little bit, and
Yeah. Well, it's,
that gives you a taste. And I'm in a very affluential area, so it's interesting what's really happening out there.
Bob, it's interesting. My oldest daughter is in social media management as well as influencer levels, and her contracts now are paying like triple what they were, say, 2 years ago.
Hmm.
So she's getting bigger contracts, but they're bigger companies. So it's
Right,
the
they have the
anthropologies.
money. Yeah, yeah,
Yeah. So I guess it's the less smaller companies there are less of them contacting her, whereas the bigger companies are still spending.
right.
So, big conglomerates. So yeah, it's very interesting. Yeah, it's interesting. So I don't know, something to keep an eye on for
Yep.
sure.
I mean,
Steve, no, I'm not at
the best economic thermometer you have is just look around your normal life, your
Exactly.
daily
It
life.
tells you, yeah, that's the best barometer. It tells you what's really happening out there.
Yeah.
Yeah, exactly. All righty, I gotta go
All
sell
right, go
some
make
art.
some money, Trent.
That's right. Got one more college education to finish up. 2 more quarters. 2 more quarters.
Oh, you get a raise.
Right. No.
After those 2 quarters, you get a raise, man, unless you have a loan.
Oh yeah. As long as eggs stay at a reasonable price. What will probably happen is that will come off my books. That expense will come off my books, and eggs will go to
Something
twenty
else will
dollars a
come on.
carton.
Yeah,
$20 a carton.
exactly. Yeah,
Yeah.
I get
All
that.
right.
Your
Thank
replacement.
you
All
all
right,
Okay.
guys.
Hi
thank you
guys,
for
see you
all
tomorrow.
joining
Tomorrow's
us.
Friday.
Have a wonderful day, and we'll
I'm
see
taking the
you
day off.
all tomorrow. Have a great one.
Have a
All
good
right.
one.
Enjoy train.
Thanks.
Enjoy your day train.
Take
See you
care,
guys.
Willie.
Thanks.